as an accountant in a company, one of the main roles for an accountant is to do bank reconciliation, which is actually getting the bank statement, assuming that the cash for that company is all there in the bank. We're just going to consider that the entire cash is there in the bank account. And the accountant will get the bank statement that shows all the transactions related to the cash within a specific period of time. And then your cash account in your books, which is your ledger or your T account for cash, will also have the transactions and the balance, the ending balance. Now, what we're trying to do here is we need to make sure that the balance for cash in the bank statement is matching the balance of cash in our books. Those two have to match logically. And the question is, what if those two balances did not match? The ending balance in the books and the bank did not match the balance in the books. Now, it doesn't actually mean that there's something wrong. It doesn't mean that someone has stolen money or there's fraud or something. It's not, most of the time it's not that case. It's just because there are some few things that are pending and it shows in one place, but it's not yet showing in the other place, which will eventually show. Or maybe there was a transaction that has been incurred and it showed up in the bank statement, but it's not yet. We didn't know about it, so we did not record it in our books. So what we're trying to do with the bank reconciliation is to, if those two balances are not equal, we're going to make them equal, okay? Just to make sure that everything is under control in terms of cash. We will talk about all the different reasons for why the balance in bank might not equal the balance in our books for cash. And we will do the bank reconciliation process to make those two balances match. Now, the bank reconciliation process, usually companies, they do that, some of them on weekly basis, some of them on monthly basis, some of them on daily basis if they have so many cash transactions every day. So it really depends. In our practice today, it doesn't matter. We'll just consider it monthly, for example. Okay, so the first thing we're gonna do is I'm gonna draw, make a line. I'm gonna try to make it as much as possible same as a typical bank reconciliation that companies do. So on the left side, I will say bank. And on the right side, I will say books, which means the cash in our books, the cash balance in our books. Now, here's the thing. Here's how you want to start with it. The first step is to show how much balance is showing in your bank statement. So we start with the balance, the bank side. It was 12,720, for example. That was the ending balance of cash in the bank statement. But in our books, in our ledger, we had a balance that was different. It was 20,850. And obviously the two balances are not equal, so we're gonna try to make them equal. Now, what we're gonna do is we're gonna add, subtract to the bank side as needed, and we will add, subtract to the book side as needed. Okay, and then eventually we should get the balances reconciled and matching eventually. So let me tell you what examples we have that requires from us to reconcile the bank side, and then what examples requires from us to reconcile the book side. Let's start with the bank. The first example, it's checks in transit or deposits in transit. And that means when we received a check from a customer for a payment, for receiving a payment, usually the moment you receive the payment from the customer, you're going to record the journal entry for that, and you do debit to cash and credit to revenue or receivable. So the moment you got it, you debited cash. Now, obviously, if you debited cash, that means in your books it will reflect the increase in cash because of that check. But it doesn't mean that the cash is already in the bank because probably the check is still, the day we did the bank reconciliation, probably the check was still with us, or maybe it was still on the way in the bank, or maybe it was deposited in the bank, but it takes 24 hours or 48 hours for that amount to show up in our account. So that's what we call deposit in transit. It's already in the books, but it's not yet in the bank. So we're going to go ahead and manually, we're going to add that amount to the bank. Okay, so add, and then I'm gonna just prepare those. Okay, so add, I would say deposit in transit, and let's, for example, consider that amount is $9,000. I don't need to add that amount here. I don't need to do anything with that amount in the book side because it's already included in the $20,850 because the day we got it, we debited the cash. So it was already added to the cash balance. But it's not yet in our bank. It's not yet added, so we're going to add it manually here. 9,000 we added to the balance. That's the first example. The second example, which also requires from us to reconcile the bank side, is the outstanding checks. The outstanding checks, it means that this time we gave a check to a supplier, maybe, or maybe we gave cash back to customer through a check, and it's just opposite the deposit in transit. We gave them the check, but they did not clear the check yet. That means our cash balance in the bank did not decrease yet. However, it was already reduced in our books. It was already taken away from our cash balance in our books because the moment we gave the check to the supplier or customer, we recorded credit to cash, which means that we decreased our cash. The moment we give it, not the moment it was cleared from the bank. Okay, so in our bank, we're gonna subtract, or we can just say less. We can use the word less. Okay. We will say less outstanding checks. Outstanding checks. For $2,000. Okay. Usually when we subtract in accounting, we put the numbers in parentheses. And then let's say that those are the only examples for that requires from us to reconcile the bank side. So now we can go ahead and add the balance plus the deposit minus the outstanding, and you can write down the reconciled balance, which is going to be 19,720. Okay. There's a third example which also requires from us to reconcile the bank, but I'm not going to consider it. But I need to explain it to you, which is bank errors. And I'm not sure if that happens very often. It's when the bank does an error. For example, they deducted a specific amount from us which was not supposed to be deducted, or maybe it was supposed to be deducted from someone else's account, but by mistake they took it from us. So obviously that amount has to be added back. We just have to call the bank, or and just tell them that they have to add back that amount. So we're just going to go ahead and add that specific amount, let's say $300. So we'll say error, like bank error, $300. So that would be added because we know that eventually it would be added anyway. Okay. Those are the examples. That's pretty much the examples that requires the bank side to be reconciled. Now let's talk about the book side, things that need to be reconciled here. The first example, it's let's say that we sold an item or we provided a service to a customer on account. So we didn't get the cash immediately when we provided that service. Let's say that was yesterday. And the customer said that I'm going to go home and transfer the money online to your bank account directly. So today we're doing the bank reconciliation, and because we in our books, it doesn't show that amount has been added to the cash already because it was on account. So the day we did the sale or the service, it was a debit to receivable, not to cash. But today, when we got the bank statement, it shows that, oh, we got the transfer from the customer, which we didn't know about until we got the bank statement. It shows that there was $100 transfer that has been received from the customer. The only time we're gonna increase it to the cash is when we get to know that we received the cash. So we've seen it in the bank statement. So we're gonna add. We will call it. It's called electronic funds transfer. So we will just say EFT. Okay, and then in the bank reconciliation, you can explain it. I mean, every company explains it in their own way. So I'm just gonna write down EFT, but you can explain further if you want. So let's say that was $100. It's already included in the $12,720, but it's not yet included in this balance because we didn't know about it. So now we're going to add it to the cash, $100. Okay. Another example, it's interest revenue. Sometimes you get if it is a saving account, if we have a saving account, and then sometimes like once a year or once every semi-annually, the bank adds some interest to us. To our bank account, and usually we only get to know about it once we get the bank statement. So we got the bank statement. It shows that there's $30 added. We didn't know about before. It's not included in this amount, so we're gonna go ahead and add that amount. Let's say it was $30, and then it's cash in, so it's just revenue, and we can call that revenue interest revenue. That's just an example. Okay, we don't have to add it here because it was already included in that amount because it showed up on the bank statement. So we're gonna go ahead and add it to our books. There are more examples, like for example, a bounced check. Let's say we provided a service or we sold something to a customer. He gave us a check. Again, the moment we received the check, we debited cash, not when we clear it, not when it goes to the bank. It's only when we receive it from the customer. So let's say that amount was $1,200 on a check, and we debited cash, and then we sent the check to the bank, and the check was bounced. It means rejected. It means the customer doesn't have enough cash in his bank, and that's why it was rejected. So we only get to know that the check has been bounced when we get the bank statement, and on the bank statement it shows NSF, non-sufficient funds, for $1,200. So we're gonna go ahead and decrease that amount from our books because we thought we gonna get that cash, so it was added initially, and now we're gonna take it away from the $20,850. So I will say less NSF check number so and so. You can show the check number if you want. Most of the time, companies they do that. $1,200. Okay. And a different example, we let's say that the bank charges us maintenance fees to our bank account, like service charge fees. Like me personally, my bank account, they charge me $9 every year. They call it maintenance fees. I don't know why, but anyway, it's $9. So we only, like companies, they only get to know about that charge once they get the bank statement. They didn't know about it, so it wasn't deducted from the balance. So now that we've seen it in the bank statement, it's already deducted from the balance in the bank. Now we're gonna deduct it from our books. So let's say that was $20. Okay, we're gonna call it bank service charge or just service charge. Okay. One more example. Let's say that we purchased an item like equipment or supplies using the company's debit card. So that amount was deducted from the bank account because we used the debit card, but we forgot to record a journal entry for that. So we forgot to subtract that amount from our cash balance in our books. Let's say that amount was $40. It's been deducted from the bank. It's not yet deducted from our books because we forgot to record it. So we're going to go ahead and subtract that $40 from our books. Okay? And we will call it, let's say, purchase using debit card, for example. Okay, $40. And there's one more example, but I'm not going to consider it for our reconciliation that we're doing here. I'm going to explain it after we calculate all the balances. So let's say that that's the only reason why those two balances are not equal. We reconciled, we added on both sides, we subtracted. Sometimes you don't need to add in one place because there's no, for example, deposit in transit, for example. So it doesn't have to be all that, maybe some of it. So we add the balances, we find the balances, and we got, if we add that plus those minus those three numbers, we get 19,720, and now those are balanced, and the bank reconciliation process is done. All right. So the other example that might make those two balances not equal, which is we did not consider it here, it's an error that happens while recording a journal entry, for example. So it's an error, it's an internal error in our accounting department. It's not from the bank, so it has to be a reconciliation to the book side. So, for example, let's say that we purchased a piece of equipment for, or maybe supplies. Let's just say supplies. We purchased it, and it was $267. Okay. It was $260. That's the actual amount, but by mistake, instead of recording 267, we flipped the 6 with the 7. So by mistake, we did 276 instead of 267. We call that a transposition. Okay, we flipped it, and we need to fix that. The actual amount that has been deducted from our bank account is 267. So 267 is the correct amount. But in our books, we recorded 276. In other words, in our books, we decreased more than the actual amount. We decreased 276 instead of 267. We decreased our cash more. Okay, because the 276 is higher than the 267. This is just an example. Okay, so to fix that, we need to calculate the difference between the amount we decreased in our cash and the actual amount we spent, which is the actual amount that has been deducted from the bank because we used a check maybe, and there was a correct amount in a check. The only error is in our journal entry, not in the check or not in the cash that we paid. So there's nothing wrong here, nothing wrong in the actual cash that has been paid. It's only in our books, which reflected on our balance in our books. So calculate the difference, and the difference will be $9. So to fix that, we have to increase our cash. So we're going to add, we will say error in recording a journal, and we will add $9 over here, because if I subtracted too much cash, I have to bring it back up by $9. Okay? So to fix it, I'm going to add $9 to this balance. Okay? Because there was 276 subtracted from here. It has to be only 267 subtracted, so bring it back up by $9. All right? And that example might be instead of adding, we might need to add. Let me give you a different example. So let's say, let me change the numbers. Let's just make it instead of 267, let's make it 395. Okay, credit to cash, debit to supplies, and let's say instead, so that's what we were supposed to record, and that's the actual amount we paid, but we did 359 instead of 395. Okay, so it's also transposition, but if you calculate the difference, you will notice that when you look at the difference between them, you will notice that we subtracted less than what we were supposed to subtract. Here, we subtracted more than what we were supposed to subtract. Okay, so calculate the difference just like we did here, and that will be $36 difference between what we paid and what we recorded. Okay, so the error, the amount we subtracted from cash was 359. So we did not subtract enough. I was supposed to subtract 395, but I only subtracted 359. So I need to continue subtracting. I need to continue subtracting $36 more than what I actually subtracted. Okay, so here under the less, we're gonna subtract $36. We call it error in recording. Okay, so it depends on the error. You might need to add or you might need to subtract. It depends on what transposition you did. And let me give you a quick tip. Every time you have a transposition, the difference between what you recorded and the actual amount is always going to be an amount that divides evenly on evenly on 9. It divides by 9 evenly. Like here we got $9. Here we got $36. They divide by 9 evenly. It's always going to be multiples of 9. Okay. That's how we do the bank reconciliation. And then we need to consider one more thing, very, very important, is that everything we did on the book side, not the bank, just the book side, it has to be recorded in a journal entry. It has to be, because you cannot add and subtract cash in any accounting system without a journal entry. Journal entry is always the way how you input your transactions. Okay, so you're gonna go to each one of these transactions, these reconciliations you did to the book side only, and recording them in a journal entry. The bank side, you don't have to record them because they were already recorded. They were already reflected on that amount. Okay, and the ones that are in the book side, those are the ones that were not recorded yet because we didn't know about them yet. Okay, so one by one. The first one, EFT, which is a transfer that we got from a customer. That will be a debit to cash because cash is in, it's adding to cash, $100. And then the credit was accounts receivable because it was a transfer from a customer who promised to pay us through a bank transfer or online transfer. Okay, that was the first journal. The second journal, interest revenue. So that will be, again, a debit to cash for $30 and then credit to interest revenue, $30. Okay, number 3, NSF check. Now, how do we deal with that in our journal? Well, of course, we have to credit cash this time because I'm decreasing my cash. So it's going to be credit to cash. Well, what about the debit side? Are we going to say NSF? No, we're not going to create a new account for NSF. If there was a bounce check from a customer, the first thing we're going to do after we get to know about it is to call the customer, follow up with the customer, and ask him to come and pay what he owes us. Come and get back your bounce check and give us a different check or give us money order or money. So in other words, we have to follow up with him. It means we consider the customer that he owes us money now, which is accounts receivable. So you're going to debit accounts receivable whenever you have NSF. Okay, so that will be a $1,200 receivable, and then you're going to credit cash. So you're technically transferring the $1,200 from cash to the receivable account. Okay, number 4, Service charge, well, that's cash that has been deducted, so it's going to be credit to cash, and then we're going to consider that just an expense. So you can just say service expense, for example. As long as you say the word expense, you're fine. And then cash, $20. And then the last one, purchase debit using a debit card. That's the one that we forgot to record. Let's say that was supplies. So that would be debit to supplies because we're purchasing them and it wasn't recorded before, so now we have to record it, and we spent cash for that, so it would be credit to cash, $40. That's pretty much how you do bank reconciliation. This is just one example. There are different kind of examples that require from you to do the bank reconciliation, to interpret the reconciliation a little bit different way, but eventually you will come up with the same formality for the reconciliation as well as the journals. They always have to record journals, and they pretty much look the same as this.